Governments around the world are increasingly turning into e-governments. That is, governments that harness new technologies to offer better services to citizens and boost their efficiency. According to the United Nations, e-governments have become a key driver for the achievement of sustainable development goals. However, when it comes to receive or make payments in their interactions with their own employees or simple citizens, their capacity to do that online is often impeded by a lack of digital payment options. This is particularly true in emerging countries with large unbanked populations. In Africa, for example, over 500 million people only own a mobile money account that cannot interact with other payment platforms because of a lack of interoperability. This is the last technological obstacle not only to financial inclusion, but also to effective e-governance. GVG has developed a solution that specifically addresses this challenge, met by so many governments in emerging countries. TransFin is a next-generation payment gateway that gives more options to everybody at both ends of the payment chain, regardless of the payment services. It ensures full interoperability in all environments, even in those with high mobile money usage. This highly secure system fully reconciles the interests of all stakeholders, including governments, consumers, and payment providers who benefit from fair settlement mechanisms. But more importantly, TransFin unlocks critical capabilities for governments. They can use it to improve their payroll management and mitigate several risks, including duplicate and ghost payments, pension fraud, and invalid records. Furthermore, in countries where mobile money is prevalent, TransFin makes it easier for them to use this channel to make and receive payments. This translates into huge savings and operational gains. TransFin also provides strong digital identity management capabilities to safeguard the integrity of the whole payment chain. Overall, it helps remove the last obstacle to effective e-government and financial inclusion. Find out more about TransFin.
Well, good afternoon, and thank you for all from wherever you're joining us from. We are having the Seamless Interoperability Forum currently happening. We are live on our LinkedIn page, and of course, we are happy to have all of you joining us for this very important session, where we'll be talking about the cashless revolution and financial inclusion. I'll be moderating this session. My name is Abi Agina from Kenya, and I'm quite delighted to be part of this very important session. For those that are monitoring this via LinkedIn, we thank you for joining us. We are quite grateful for you to join us. Well, from those that are from French-speaking nation, we have an interpreter, and I'd like to just give some quick guidance that I'd like to guide you to click on interpretation and selecting the language you want. And of course, this will be able to enable you to listen to this session in whichever language that you select from the interpretation. Well, once again, ladies and gentlemen, welcome to this session. We have a great list of panelists who will be helping us shape this discussion. I'm quite honored to be moderating this session. We have some renowned names within the space around cashless transactions in the world, and it's quite an exciting time. Allow me to quickly walk you through. Sorry.
Abi, I think you're on mute.
Are you able to hear me now?
Now we can.
Sorry for that quick technical glitch. I'd like to now bring in one of our panelists, and we have quite an interesting lineup. Allow me to now bring in, this is none other than James Gabriel Cloud. I'd like to just allow us to take a look at his profile. James Cloud is the CEO of Global Voice Group, a global provider of ICT and Reg Tech solutions.
Sorry, Abby, maybe you should stop sharing your screen because we are seeing your screen as we speak.
Oh, sorry about that.
Now I think that is where we can see each other.
So thank you for that. Yeah, we have Mr. Cloud joining us. Just a quick bio that I was taking us through that. And he is the gentleman that you can see there, raring to go and looking forward to a very robust discussion. We also are delighted to have with us Kennedy Luhombo, who is the Senior Business Development Leader, Merchant Sales and Acquiring at Visa. He's serving as Sales and Solutions Team at Visa in East Africa. And of course, in this role, Kennedy Luhombo is responsible for acquiring business relationships and ensure the growth of Visa acceptance at merchant locations. Also in our panel today, we have with us Andrew Mutua. Andrew Mutua is from Pesakit. Andrew Mutua is the founder and CEO of Pesakit, a last mile agent network platform enabling digital and human interactions to accelerate digital commerce and financial inclusion. Well, I'm sure we are all on the same page in regards to a very robust set of panelists. And we started off with a quick video, which most of us have been able to take a look at. And at this juncture, I'd like us to quickly get into this debate. And my opening question is really on what are the primary challenges and barriers for interoperability in Africa? And I'd like us to allow Charles to open the floor. James, I beg your pardon.
Thank you for having me. And good afternoon to all the other panelists who is joining us for this session. Before we talk about the challenges or barriers for interoperability, I'd like to start by why should we have interoperability first? Okay, so I believe it's important for us there's no need to have interoperability just to have it. The fact is, Africa leads the world when it comes to mobile money payments. And when you look at also the traditional banking system, which is the measure, the yardstick that is used to measure financial inclusion, you see like a very, very small percentage of the African population and is banked. I mean, so now financial inclusion, the bank versus the unbanked, it's a concept that I believe is outdated, because when you look at the number of people using mobile money and the type of service they start to benefit, the kind of transaction they are able to do now in Kenya, saving in mobile money ecosystem is quite high. We talk about like billions of shillings. So now by having different systems that have been developing over the years, and they're quite fragmented. So in order to really achieve financial inclusion, it is important that those different systems can speak with each other. This is why it is important to have in place proper interoperability. And for that to happen, you need a proper regulation, because you have different systems that have, you cannot use the same regulations of the 60s that are for the banks, and you apply that to these newly created platforms, the innovative platforms that are providing services such as mobile money. So I think that the regulation should be key in order to help in bringing together those different systems. And also, I think the private sector needs to continue to invest in infrastructure and technology that can really lower the cost, and for people to be able to access those kind of services. You can access, if you are able to open a bank account, perfect. If all you can do is to have a mobile money account, that shouldn't prevent you from being part of the broader ecosystem where you can access different financial services.
All right, thank you, James, for those very weighty sentiments you've just shared with us. And I'd like to also allow the other panelists to also give their remarks in regard to this, in case they have anything to add on. Perhaps, Kennedy, would you want to make just a quick brief remark before we transition into the more substantive issues?
Yeah, absolutely. And maybe just to add on to very good points that have been made by James. Interoperability is not akin to only payments. Interoperability is a concept that spans across multiple industries. We talk about interoperability in the health sector. When I get my insurance from an insurance company, can I be able to any health institution that I want to access or that I prefer? In payments, it's given that, you know, regardless of who is providing you with payments at a much point, should be, you know, it should not necessarily be tied to the fact that you should be able to accept payments in any form. There's also interoperability in the communications. I mean, you have one mobile network operator that is service to. You can be able to call people on the network as well. So when you talk about interoperability, is really it's a wider concept, right? But in this particular instance, we are narrowing into interoperability with the payments. It does have quite a bit of benefits, right, on the reasons why. Some of them have been mentioned by James, that it has reduced operating in a significant way. It was financial inclusion. It enables quite a bit when it comes to operational efficiency as well. And players get to learn from each other because of interoperability. I think there are some very significant barriers to interoperability. If I can just mention a couple, you know, it's obvious. Can you hear me? I'm just
sorry, Kennedy. We're getting your sound is coming in. The frequency isn't that strong. I think your network would be a bit fluctuating. We kept hearing you as you disappeared, but perhaps as we fix that, let's allow Andrew to also just weigh in on this, because looking at interoperability, it's very critical for it to work. And I'd like to hear your opening remarks really before we proceed to our other set of questions.
Yeah, thank you. Thank you all for having us here. I think for me, how I view interoperability is, you know, I see it as the gateway to better financial services, more affordable financial services for everyone. And when we talk about financial inclusion particularly, I think one of the main items that will make financial services work for low-income earners, for marginalized communities, will be interoperability. I think the biggest competitor to interoperability is actually cash, because I usually see, you know, with cash, having cash here in Kenya, for example, you can transact it at any bank account, at any shop. All shops accept cash. When you go to the hospital, anywhere, anything you do, cash actually works. So the challenge for us not having seamless interoperability is that we will still have so many people dependent on cash, whereas most of the governments are trying to go into a cashless society, either for them to collect more taxes, for them to have better visibility, more transparency, or even more efficient economies. So I do believe that interoperability is key to unlocking access to financial services for everyone, but at the same time for governments I think it's important for them to play a facilitation role because it will be of greater benefit to them. Those will be my remarks for now.
All right, I can see Cloud is nodding to your points. I'll be coming to you, just taking it back to Kennedy. Is Africa socially ready, technically ready for interoperability?
I hope my sound has improved.
Much
Yes.
better now.
All right, great. So yeah, I mean, very interesting question. Is Africa ready for interoperability? And I think it's very important to highlight, what goes into what do we mean when we say interoperability? There are different types of interoperability. There is bilateral interoperability between two parties who are interested in partnering in order to be more efficient in service delivery to their consumers. Then there's the aggregation model where you have an entity who is basically facilitating communication between various players within that specific industry. Then there's the interoperability that, for example, for us, payment organization has been built over time, and that is the multi-party or the four-party model that brings together people we call the issuers, people we call the acquirers, and then the card holders and the merchants together, right? And that is usually it is defined through a very elaborate process. There is an organization called EMV Core that then does the facilitation of various standards within the industry, makes sure that certain things are in place for interoperability to happen. Our focus has been mostly around, as Visa, at least Visa, we've been focused a lot more on enabling digital and data security, strengthening regulatory approaches to and advance and level playing field for all players, as well as expanding financial and digital literacy among the various players. Is Africa ready for interoperability? I would say absolutely yes, because it's already happening, though at various levels. I mentioned bilateral aggregator, four-party model, and you will find all these kind of models operating just about any industry that is fostering interoperability in Africa. However, there is definitely room for improvement. We have to really figure out how to better protect my data through the right processes. We have to ensure that we have the right governance structures in place, handle disputes, build operating standards, enable inter-party economics, as you would expect, model enables, and then the overall data protection as we continue interoperability. There are definitely levels of interoperability that exist in Africa, but there is still room for improvement.
All right, I like that you say there's still room for improvement, and it takes me back to Andrew and Cloud, I can't wait to hear your comment on this. Of course, Andrew, you come from a background where you've been a founder and you've literally grown ground up in terms of setting up solutions. And is Africa really ready for this?
Yeah, I think we are ready both technically and socially for interoperability. Maybe just an example for mobile money is when mobile money was launched, it was quite siloed, where you could just, let's say, only transact, where if you're an Airtel Money customer, you could only transact with Airtel Money customers. If you're an M-Pesa customer, only with M-Pesa, or if you're an MTN Momo customer, only with other MTN customers. And also, when you went to an agent point to deposit or withdraw, you can only do it for just specific networks. And so when regulations started to come in to allow for the telcos and mobile money providers to allow customers to actually use any agent for them to deposit or withdraw, that was the first point I would say that started interoperability for mobile money, where we had agent interoperability, even though they were still siloed, but one agent could serve many providers. And so moving on, we've started to see services where you can see mobile money companies actually partnering and value can be exchanged across their networks. You've also seen other businesses like banks coming together with the likes of Visa, MasterCard to allow transactions between mobile money and the banks or between bank accounts. So I feel like technically there's so many small things happening. And so that's why I feel we are ready for interoperability. Socially, for sure, people want interoperability. They might not say they want interoperability per se, but they would want the benefits of interoperability. It means affordable transactions or more efficiency or convenient services. Let's say an example is in Kenya here with the e-citizen service. For you wouldn't say that, let's say as a citizen, I want to go and have all those payment options, but maybe the guys who developed that thought, maybe let's provide all these payment options and also let's make all these government agencies to be able to communicate so that when you go there, they're all interoperable, either it's immigration, security, all those different government agencies or departments in one platform. So socially, we all know that we want efficiency and convenience. It's just that we wouldn't say we want interoperability, but I feel it's now ready. And we have very good examples of it having worked in different sectors or in small ways. And now we need really to drive it fully.
Quite some very heavy points you raised there, Andrew. And James, I just also want to hear your views on this. Of course, I know you're already a pace setter, you have the cheese already moved, but just want to get your thoughts on this as well.
Yes, I'd like to address the readiness of Africa from two angles. I completely agree with Andrew and Kennedy. I believe from a technical standpoint, of course, we are ready. Now, where I believe we are, there are a lot of to be done is from a regulatory standpoint, where I believe within each country, there should be, I think, some kind of harmonization, which can allow where the banks and mobile money or different alternative payment system can be integrated with each other. And also from a continental level or between countries, you can really have proper interoperability. So for example, today, I'm in Madrid, I go online to my bank account, I make a transaction, a wire transfer to Andrew. Tomorrow he'll receive it, regardless of the bank account he's using, because SWIFT and other technologies have allowed that to happen. Today, because of the I would say, void in leadership from a regulatory standpoint, you see a lot of aggregators, companies that have, of course, the proper license, and then where they put together, let's say, 5 types of services from different service providers, or take another 6, but they don't speak with each other. So today, from the same example I gave about the bank, but if I am in Rwanda, I'm using mobile money from MTN, I want to send, I need to make send money to someone using mobile money in Senegal. It's impossible today, not because of the technical challenges, because I believe today Africa is leading in terms of innovation when it comes to mobile money services, for example, or alternative type of payment systems, but because I believe there's still a lot to be done from a regulatory standpoint, where regulatory bodies really need to work together to really harmonize the steps being taken. So the same framework can be established at a continental level, which will facilitate the continental trade, which will facilitate also, which will help Africa to be to be able to speak at one voice when it comes to like an economic, to be an economic bloc.
You're on mute again.
Sorry, can you hear me?
Yes, we can.
I'm not in any way having challenges with interoperability. I think it's my microphone. But moving the conversation forward, just like what James just ushered us into. So I'd like to hear from you when you look at how does interoperability support the financial inclusion, especially in a region like Sub-Saharan Africa, where we're still having very low numbers of internet penetration. Kennedy, I'd like to hear your views on this.
Sure. I think interoperability is consequential to financial inclusion. And I say that because interoperability is extremely important in offering significant value propositions to consumers. It shifts competitive advantage away from infrastructure focus and towards building true value for consumers. And so it's extremely important that any economy and any industry fosters faster interoperability. It is for the good of consumer, but also it's also for the good of because it allows for shared infrastructure, which then translates into lower cost of delivering service. And when you have lower operating costs, it does translate into the average price that it's for the delivery of that service, and brings a lot more people who can then now afford that service into the environment. So lowered payments economics, especially when you talk about interoperability in the payments network, lowering payments economics is extremely important in ensuring that acceptance is then fostered beyond your typical merchants who have always let's say payment, for example. Right? So it's extremely important for players in the industry to be the leaders in enabling interoperability. To James's point, there's a lot that the regulator can do. A lot of true interoperability initiatives have actually been begun by the players themselves, not regulator. So we have players who are agitating for interoperability within their own ecosystems. Then you have a winner, because then the regulator is able to then follow through on enabling from a support perspective, not necessarily being the one to find. In fact, there's an argument that regulator-led interoperability usually leads to significant negative effects to the industries involved, because the regulator is coming from a point of view of it is good for the good of the economy for us to achieve this. And the players are coming from a point of view of I need to maximize my profits for as long as I can maximize my profits. So you have competing objectives. But when you have the players themselves saying it's cheese has moved, we need to now really compete based on who can win the customer more, opposed to who can roll out 20,000 ATMs in every corner of the country and put point of sale machines, like 150,000 point of sale machines, then now you have a much more constructive conversation. So I think for me, what I have seen is interoperability has actually fostered across the board, especially to the rural areas, where honestly, that is where we have significant caps from a financial inclusion perspective, to bring into the ecosystem a lot more participants from a consumer perspective, because able to then distribute your services far corners of any country, and even across the borders for those who are moving between countries.
All right, thank you, Kennedy. Earlier on there, you are almost taking us on a slippery slope with one of the comments you made, but I'd like to expand this conversation and take in Andrew's viewpoint as well, that how significant is interoperability playing a role in terms of financial inclusion, especially in Africa?
For Africa, I believe the key to really now fulfilling true financial inclusion, not only access, but also financial resilience, will be interoperability. We have guys who can access financial services, but it's very sporadic, where you can only access it when your point of access is available. And to Kennedy's point, the true value for financial inclusion, especially access and resilience, will be how all the players create products that are valuable to customers, not really competing on how many access points they have, if it's ATMs or agents and the likes. So if all these access points are interoperable, or all these access points are open in such a way that if I'm using a different provider, I can go and access a certain service from one provider, a different service from the other, then that brings in true value for the consumers and for everyone in Africa. Secondly, in terms of financial inclusion, you'll see that in many countries, there are a couple of countries that are quite leading in Africa in terms of financial access: Kenya, Nigeria, and the likes. And most of them have different types of access. Some have majority, which is account-based, bank account-based, and others are mobile money driven access. But what they don't have is, you'll still find the value of the transaction is low. There is let's say the value for the services they access, either it's savings or insurance, or the true values that financial services that add value to the customer. That's the same everywhere you go. People have access, but are actually financially excluded or financially unhealthy. So for me, I believe if we're able to sort interoperability, then that's when we will start to see very valuable products being built for customers, because now all the players or all the providers will actually be innovating for the customer, either a small business, an individual, let's say a woman in a rural location, a farmer. Now we'll start to see guys truly innovating for those use cases that are the majority of people in Africa, because it's not really a matter of who has the biggest network. It's more, what value can we give the customer, because the customer it's open for them to access any service. So that's how I see truly financial inclusion will be achieved, and specifically financial health for everyone in the continent.
All right, I can see Cloud is itching to respond, but I'd like you to just hold your thoughts, because I have a follow-up question to Andrew, because you've mentioned a very valid point around boosting financial access, but is boosting financial access equivalent to quality? Because we've seen scenarios where, take a case in point, in Kenya, where we made it very clear that we want to deepen financial inclusion, but at the bottom end of it, there are costs associated with this.
Yeah, true. So for me, I believe really financial access doesn't really reciprocate and say that now you have quality financial services. You can access financial services, but they're of poor quality. And here in Kenya, it's a very good example of, maybe I won't name the players, but you know them, of guys who have millions and millions of customers. But let's say if the customers want to access credit, it's so expensive. It's like Shylocking. But because they have those platforms available, then and customers have access to that, then customers are trapped in a very difficult situation. And that's why, in terms of credit-wise, and that's why I think when you saw the government bringing in measures to curb maybe people being listed for debts, on the reference bureaus, or the government trying to define interest rates at the central bank so that it's slightly more regulated and governed. So here what we have now is, here in Kenya, is we have access to financial services, but because most financial services are not well regulated, then the quality of those financial services doesn't really drive financial inclusion. And so that's the challenge we have. For me, how I see it is a solution is, if everybody has access to the correct infrastructure, distribution infrastructure or technology infrastructure to bring in financial services, then it means you will also have access to most of the customers, if it's driven by regulators specifically, if it's a central bank or the other communication authority driving that. And so what you'll see is, we'll start to see more competitors coming in and innovating better products that guarantee quality. So for now, what we're struggling with is we have good access, but poor quality products. So access doesn't guarantee quality. That will be my response.
James, the floor is yours now.
Yeah, I will start by saying I agree with you. Access doesn't really guarantee market quality. And again, I keep going back to the role of regulator here, because interoperability is a global goal, World Bank, United Nations, different international organizations are really pushing, because it is a means that can facilitate access, which will lead to this goal, this financial inclusion. Now, if you leave that to the market, not all the players are really interested in that, because if you have, if you own, let's say, 60% of the market in mobile money market in a specific country, why do you want to be able to interoperability? And you will prefer to keep everyone locked in your ecosystem and provide all services, and also the cost issue is there as well. Now, this is where, if the government pushes for that, the regulator plays a role where take the lead and say, this is what needs to be done. A new entrant comes to the market, you have 50 days, you have 45 days to be connected to all the other ones. So I believe by pushing it this way, you open the space for more innovation, because there are many innovative services that entrepreneurs and young startups, they don't have enough to really test their products or their ideas at a big scale, because the cost to even access those networks is exorbitant. So I think it's important that we look at it. Okay, the goal is financial inclusion. What needs to be done? There are many, we need to invest in literacy, in infrastructure, all of that, of course. But I think regulators need to really set the right framework that allows new entrants, that foster innovation. And how do we foster innovation is by allowing really all those different platforms to speak with each other, to integrate with each other, and the ultimate beneficiary will be all the population.
You raise a very compact point there, James, and I'd like to take you on further. So what is the nexus between interoperability and governments using this in a bid to fight fraud, and against what kinds of fraud that we are seeing currently happening, especially within the cyberspace?
Very, very interesting, because I think government needs to to lead by example. For example, if you, as a government, you are promoting financial inclusion, you are promoting access to digital services, but you're still paying the public servants by cash or by check. I mean, there is some kind of contradiction. So I think they need to embrace it. For example, by promoting interoperability, all platforms should be connected, but all payments moving forward to the pension fund will be through mobile money, through bank account, no matter what you have. So now, as a government, you are really not only setting the rules, but you're also embracing the concept of interoperability. By doing that, you will have, the transactions will be more trustable, because they are digital as opposed to cash. And you are able to really link that to some kind of digital platform where, for example, you manage your payroll online. Because in countries like Kenya or Uganda, I don't have the exact figures, governments are losing a lot of money because of ghost payment to ghost employees or pensioners that who are no longer living, but still someone is still collecting the money. So there are a lot of frauds in that sense is happening, because especially the way payments are done today by governments throughout the chains is not really digitized. So by embracing digitalization, by embracing the new alternatives when it comes to payment, I think will help in fighting against those type of frauds. Now, besides those ones, I believe having in place different digital platforms, government needs to have proper monitoring capabilities in order to monitor AML, in order to monitor CTF. And the solutions such as the one we provide as Global Voice Group gives them this, capability where they can at any given time know whether all the service providers, all the players all working within the ecosystems are really following the rules, and all the people interacting, interacting within the ecosystem also are being protected.
All right, and Kennedy, let me throw the curveball to you. We've been in a situation where you're seeing sector players saying innovate, then regulate. But listening to what James has put out across is the fact that governments can actually save a lot by using interoperability as the intermediary when it comes to streamlining especially services from a cashless point of view. What, in your view, needs to happen for us to have a very secure ecosystem for this?
So it's an interesting approach, and there are arguments on both sides: innovate and then regulate, or regulate and then innovate. There are very strong arguments to support. What I think is important, and what we as an organization at PISA also champion, is to strengthen regulators with the experience that we have in the payments industry, with the right support or information, for them to be able to build that enabling environment. So the argument around innovate, then regulate, or regulate, then innovate, I think for me, I would go something in the middle. If a regulator is very well versed in what the environment that they're dealing with, then it makes for a very strong case to regulate before innovation. But innovate before regulation usually comes because maybe there are certain parts of the that are moving really fast in a certain direction, and the regulator is probably not at that point in time to actually offer the right what I think should be happening, and what we at Visa believe should definitely be happening. All industry players have have a responsibility to empower the regulator with the right information, so that the regulator can enable or can build the enabling environment for what they're trying. Encouraging interoperability frameworks between players, it has always remained and will continue to remain a preserve of the regulator. James has clearly said, and I totally agree, not everyone is enthusiastic about it. Yeah, players have their own agendas, driven by certain objectives. Interoperability probably is not one of the top ones. So the regulator at some point has to step in and say, okay, I'm going to have to referee this. But for them to effectively referee, then they need to be refereeing it with that's where we focus. Our efforts as players in the payments industry to make sure that the regulator has the right information when we do decide to step in and referee various players. What needs to be in place, especially for Africa, and specifically, I would say maybe for mobile money, because this is already existing in the card industry, and there's a lot of lessons that can be learned from the card industry.
All right.
Is having the right framework for regulating, or the right framework for coordinating activities. And that framework includes dispute mechanisms. How do you handle disputes? How do you come up with operating standards? How do you build that interparty economics? And how do you protect consumer data before you can put together a framework for interoperability?
Awesome. And actually, your last point leads us to our next session, where I want to open it up to some of the questions being sent in the interest of time. I'll be able to take a few questions on our chat box. I see a question here actually tied to what Kennedy, you were just responding to in regards to regulation. There's a question here from Andrew Mwangi. He's saying, with regards to regulation, is there a framework in place for the interoperability of payments between countries in the region? James, you want to shoot first?
The answer is no. I know there has been a lot of initiatives, and Smart Africa Alliance, which is, I think they have now around 30 members from Africa. They are trying to bring together different regulators from the telecom sector, also from the financial sector, so there can be some kind of harmonization, but this is still ongoing. And going back to what Kenny was saying earlier, just to add on a little bit in terms of the role of the regulator, yeah, I think the regulator sometimes tend to go, I mean, there's a new system, let me just set the rules. And this way, by going too early, you can really completely stop all the innovation that is possible. If you look at Nigeria as one of the biggest, the most populated country in Africa, look at the level of mobile money in Nigeria and versus Kenya or Ghana. And the difference of this level of use is just merely about when did the regulator decide to step in the development of mobile money. And there, I think, based on my experience, there are like 3 key roles I believe regulatory body should have. First, oversight, okay? This is the fundamental role of the regulator. And today, what is happening in many of them, they lack the right tool to really have this oversight in real time or near real time. So this way they have to go conduct audit and stuff like that. So I think they should also embrace the use of technology, ICT tools, to really oversee what is happening in the ecosystem. And number 2, as the catalyst, where the regulator should encourage, we are just this point earlier, where they encourage the use of these new system and interoperability. And also it can be operational, because by taking the lead, by having central banks processing all the clearing, acting as a clearinghouse for all the banks. Maybe something like that should be done also for all the payment systems, where central banks take over the operation of having a payment gateway in countries to interconnect all the different platforms, and this way give access to new entrants in order to really foster innovation.
All right, and Andrew, I know you've been processing a number of thoughts in regards to the subject matter under discussion, but from where you sit, what specific role can governments, and more precisely, central banks, play regarding interoperability?
There are a couple of things governments can do to really foster interoperability in their countries. There are a couple of initiatives I've seen governments try to do. There are a few governments that are trying, about 10 governments in Africa that are trying to develop an e-currency. So like in Nigeria, it's an e-naira, or in Ghana, it's an e-cedi. And how they are positioning their e-currencies is they want it to be an interoperable type of mobile money service. Most of them are discussing about that. So if truly they can enable, let's say, a virtual currencies from away from the cash-based currency, then they can allow providers or players within those markets to interact with their systems to issue that e-currency. Then that will truly drive interoperability, because now it will be a government-based digital currency being transacted across, not really, let's say, a telco-based e-value or let's say a digital wallet e-value. It will be the government's e-value being transacted across different networks in that country. So that will drive interoperability. When I see of how it can work across different countries, I believe governments also hold the key to that. And for me, I see that governments should be more innovative. Like, to the question you asked, Kennedy, should they be catching up? Or I think now it's time for the governments to be the innovators, because with them, then the industry will be playing catch up to them, and that will truly drive the value we were talking about, financial inclusion for everyone, and also just for the continent in terms of intercontinental trade. So let's say an example is if let's say we're in Kenya and Rwanda has an e-franc, and here in Kenya we have an e-shilling, for example, it's very easy to transmit that with predefined interest rates at the central bank level. So if those two central banks are already coordinating or working together, then it will make work so easy for all the other players. Instead of, let's say, you as a digital wallet sending money to the central bank sending to a different digital wallet, or sending directly to that wallet, then they have to look for a place to withdraw or a place to transact. So if it's been driven, I see, if it's looking into the future, I think the central banks must be more innovative than even the fintechs or the incumbents, because those are the guys who will truly drive interoperability. Those are the guys who can drive inter-Africa transactions, and even better so inter-Africa trade and financial inclusion. So for them, they have
all right. Quite some mind-blowing proposals there. Of course, I do know that central banks have been keen to embrace this, but I know, Kennedy, as you get your closing thoughts before we get the final thoughts from James as well, the issue of cybersecurity and consumer protection can be a win-win, especially if it is well tackled. I just want to get your thoughts on this, Kennedy, as we wrap this session up.
So data protection is becoming a very topical issue, because we've seen organizations use consumer data in some interesting ways. I think Andrew did mention how, for example, mine consumer data is readily available to phones to offer solutions to consumers. Solutions may or may not be, to the benefit of the consumer. And again, there are very strong arguments to support both sides. But I think it's very important that continuously, and this is, I think, one of the critical functions that a regulator really has to step into charge. How do you protect consumer data? You know, in Kenya, for example, there's this law that has been around consumer data that for the first time is giving at least some guidance on how data must first and foremost protected by the entity that the consumer is trusting them with whatever information the consumer is trusting them with. And then second and most important is how do they then utilize that data to build new solutions, or who else gets access to and what for. So I would say from an industry progression perspective, and this is one of the key benefits, coincidentally, that interoperability offers. Right? Interoperability offers access to data that then fosters even more innovation around consumer. So it's that level of, you know, a bit of contradiction, I would say, that, you know, you're trying to protect consumer data, but also consumer data is an engine for developing value propositions. So I would say it's a double-edged sword in my view. I think it's more important to ensure that consumer data is protected and making sure that the right people have the right access to it, and those people who actually do have access to it do exercise a certain level of integrity when dealing with consumer data.
All right, and we need to now close off, and I'd like to get James to wrap it up, especially listening to all these very vibrant conversations around interoperability and the fact that the train has already left the station. There are teething problems in between, but where do you see this whole digital transformation going from your crystal ball?
First of all, thank you for having us, and thank you to the other panelists for this very interesting discussion. Yes, I believe the trend has already left, and there are a lot of initiatives when it comes to digital transformation. But today's discussion also clearly demonstrate that the regulatory bodies really need to take the lead in really pushing for interoperability that can really facilitate access to financial services, that can really foster innovation, which in turn, which will lead to financial inclusion. I think for me, those are the key points that I will get from this conversation. But again, financial inclusion, what it means is like improve people's life. Sometimes when we are having debate and discussions that we look at that very technical terms, but at the end of the day, digital transformation, financial inclusion, there are lives behind those terms, and that we want to improve. We want to improve the society. We want people from wherever they are in the world and get out of poverty. Those are tools that can really be helpful, and all of us from the private sector, from a government standpoint, we all have a role to play. Thank you.
Right. Thank you so much, gentlemen. And of course, to all our participants, we still have our Q&A open. I don't know if there's any burning question someone has before we close it off. All right. I believe we can still allow for more questions, that we can still canvass, even if the session comes to a close here. We'll allow people to still ventilate and share their questions, their observations. But I'm quite intrigued by the quality of discussion from the panelists, especially looking at the moment in time we are in history. And I like what James, you just concluded saying, and one of the things that I've picked out of this very important conversation from James, you indicated that we must create space and innovate. And this clearly will shape how we transition into all this. And also also liked what Andrew did bring up, especially touching on allowing Africa to serve as a gateway to better and more affordable financial services. This is very critical because we have a population that is literally on the verge of trying to become very financially savvy. And of course, last but not least, from Kennedy, you clearly spoke from the heart, saying that Africa is ready for interoperability and it's actually being implemented. And this is quite encouraging to hear. And of course, get to react on what this means for the region. I see a final question here. I don't know if the team will allow me to, we can take this question away. What do you advise on this? Because I'm seeing our time is far much spent. Can we take one question? Can I indulge the panelists for a last one?
Yes, please, Abby, go ahead.
All right. We have a question here from Wahid Enaboy. He's saying, developing interoperability is a complex process and 3 elements needs to be in place. 1, a clear and fair governance model to balance cooperation and competition between participants. Secondly, an economic model that incentivizes all stakeholders. And thirdly, an operational model that connects participants in a secure and reliable way. So this is his question. Why isn't there a focus on consumers, educating them, showing them the value of being an end user, and incentivizing to empowering them? Love to hear what Andrew you have to say on this.
This is a good question. I agree with Wahid's points, especially it's a complex process, and for sure we need different models, the governance model, the economic model that has incentives for everyone, and also a model to operationalize it. And with that, I feel like governments can learn from the private sector who have actually done a bit of interoperability, so how they do all those 3, and bring in either technology providers or governance advisors, or all these guys who will help the regulators innovate. But to answer the question, I see that without true interoperability, there won't be a focus on consumers. So people at the moment are focused on consumers to educate them as to how much, let's say, the value of the products they offer is good. Like for us at PesaKit, we're educating our customers on our value proposition. But I won't take time, let's say, we might not take time to educate the customers on interoperability or the incentives therein, because it doesn't really add up to the business economics. But if, let's say, the interoperability is already in place and facilitated by the central bank, then for us, we will now start to innovate more to compete with the other players, or even to existing players, because we see there's already access for us to all those customers. There's already access to us for all those, for the entire infrastructure. And there's a lot of economic incentives for us as a business to even innovate more for customers, for our target audience. Yeah, so I feel like the different players can play different roles. Central banks really need to start innovating, provide the infrastructure or provide the guidance, both economic or governance-wise. Then we'll now start to see the value to consumers, because players like us we won't have any excuse. We'll just be innovating for customers.
Interesting. And I'd like to hear your thoughts, Kennedy, then we go to James, because Andrew, you're saying they'd like to see the central bank innovate, but clearly the role of the central bank is to regulate and facilitate and give a conducive environment for ideas and innovations to thrive. Are we saying it's high time central bank governors go back to the drawing board?
Well, I mean, it's I think I agree with Andrew. It's there is room for innovation by the central bank. And the innovation we're talking about is not for the central bank to roll out competing products, right? It's for, it's innovation in terms of ideas, in terms of, unique ways of solving day-to-day issues that affect people. So, for example, around access to financial services, the whole financial inclusion stuff, it can be solved in many different ways. And there are so many examples that can be drawn out of, what others have done. And that forms part of the innovation agenda. Right? So it's not necessarily to roll out products as a central bank, but through how can they enable operating environments in the most unique way. Now, just going back to the question that was posed, why isn't there focus on consumer education? I think it depends on the level at which an industry is at. Yeah, so in the nascent stages, there is little incentive, to Andrew's point, to engage the consumer. But when the industry is now, fairly maturing or getting into that maturity level, you can see some format of interoperability coming through. It's very important to start with the consumer to drive home that value, the value that with whatever I have to be able to transact, I can transact even with our competitors' product. Very important to engage consumers at that point, but I think it depends a lot more at the level at which the industry is. Visa, for example, belongs to an environment, the card industry environment, that has been built over years, more than 60 years. So fairly advanced from an interoperability point of view. And our education is usually much more centered towards driving that interoperability agenda. It's exactly the same thing with our competitors within the industry. But I think there's more to be done, obviously. But engagement of consumers, in my view, I would say it's definitely the state at which the industry is at.
All right. I'll be coming back to you, Kennedy, just to get a sense of the average penetration rates in terms of demography, especially among the millennials. I don't want us to lose that point that was raised around consumers. James, I know you have a lot to say on this, but
no, very quickly, I'd like to talk about the role of the central bank and the question you raised, whether they should just roll out systems or products. And I think Andrews and Kennedy, they are right. Innovation can be at different level. Innovation can be how do they the way they play the role, but in a more innovative way. For example, they can, instead of printing cash, they can start to work how to issue digital currency, supported by central bank. It's more an enabler, a role of enabler, how you can in an innovative way enable the whole ecosystem, and so to promote interoperability and financial inclusion, which will benefit the consumer at the end of the day. They are the big winner.
Okay. And you didn't touch on the fundamental issue that was part of that question, James, where they're asking us, how do we achieve a system where we can incentivize as we empower them?
No, but the incentive will come from the benefits that you get as an end user by using or by, if I know today, instead of, if I'm in a village and instead of going to pay to go and collect a cash that has been sent to me, I can just receive it from my mobile money. But with my mobile money wallet, if I'm not using everything, and I can put part of it in a saving account that will pay me an interest, and now I'm starting to integrate the whole ecosystem and benefit from it. Those are by knowing that it's possible, I believe the incentive will come by itself.
Well said, well said. If you were around, would have clapped.
Exactly.
But taking it back to Kennedy, of course, we're trying to build a consumer fast driven kind of model. But I just want to hear from you the average penetration rates in terms of demography for young people using card for payments. We have over the years seen the bulk of it being skewed towards the elderly, the more formally educated citizenry.
Very true. It's very true. And that observation is not just in, for example, where you and I are, but across multiple countries. Because especially card payments has been traditionally more attractive to the affluent affluent part of the, but that has changed significantly in the recent years. And we are busy figuring out, or rather actually implement ways in which we can distribute our visa credentials in very unique ways. Sometimes partnering with mobile money organizations to offer what mobile money are unable to offer. That is, I use my value in my mobile wallet to be able to pay an international merchant, for example. There's a lot of trade that is happening between, say, Kenyans, the outside world, importing goods, paying suppliers. So those kind of innovations and those kind of are now enabling more and more consumers to be able to access the value proposition that we have held for a long time. And that is, whichever country, wherever you land, if you have a Visa card, you can be able to use it at any point in time. You can be able to act from any ATM anywhere in the world. And so by partnering with even mobile money organizations, for example, and offering solutions such as digital cards or virtual cards, then you're opening up and you're able to then distribute the services to more consumers. So it's changing. It's a journey. It's a journey. So this has been the case that more inclined to act with consumer, but not by design, because it just did happen. But it's very important that we continue to address when we don't.
All right. Thank you. Thank you so much, Ken and James. Any parting shot?
No, I think it's well said. I mean, not much to add at this stage.
All right. Well, I'd like to also allow Andrew any parting shots.
Yeah, I still believe central banks should innovate more than the rest of the industry. They should lead the innovation, or partner with existing players like GVG or fintechs or the likes of Visa to actually come up with products that will work and drive interoperability, because that's how value will be derived for all consumers. So central banks need to up their game.
All right. I see James is smiling away and chuckling. All right. Thank you so much, ladies and gentlemen, for making time to be with us throughout this 1 hour plus session. It's been exciting to hear this very imbuing comments and industry trends, very enlightening, I must agree. And on my own behalf, I'd like to thank the entire team for giving me this chance to work and drive this conversation, because I'm very passionate about the financial inclusion in the continent. And I'm hoping to see this being one among many of the sessions we should have as different experts in the industry, so that we can always raise the bar Well, on behalf of the team from GVG and of course, Susanna, thank you for putting this together. It's been a pleasure, it's been an honor, and I hope to have more and more of this. Thank you. I'd like to close this session and hand it back to Susanna to walk us through in case there's anything that is unresolved. Thank you.
Thanks a lot, Abby, and thanks to all the panelists for participating in this event. Thanks a lot, and hopefully we are going to see you again soon. Thank you.
Thank you.
Au revoir.
Au revoir.